Amit Bhartiya, partner at GMO, joins us on the show from Singapore. Amit, hi, morning. It's been a tough summer for the emerging markets. What's your view? What lies ahead?
Actually, it's not been that tough a summer. It's been tough for countries with, high vulnerabilities and poor macro environments. I mean, if you look at countries such as China or Russia, in some sense, these markets have actually done well. China is up, about 15% during this period. So I think, you cannot really categorize emerging markets as, a single asset class in some sense, because different countries have done differently depending upon their economic situation.
Amit, morning. Nikunj Dalmia also joining in. Amit, the big concern for liquidity watchers is that what Fed could do and what will be the implications of tapering. What is your understanding? Do you think the Fed event will be more like a binary event in nature?
Well, again, I think it will depend on different countries. I mean, if you are a country with, high current account deficits and you are dependent on foreign flows, obviously it can be terrible. So it depends on a case-by-case basis, in my opinion. But also, I think it's important to know, when you talk about tapering, there are two things about that. One is the magnitude and the duration. So even if the amount comes down, if the duration of tapering is extended, then effectively it means the same thing. So I think you have to take that into consideration. But also, I think what is more important than tapering is any country's domestic policy. So if a country has good growth-oriented domestic policies with stable macro policies, then one shouldn't fear tapering so much, because fund flows should come back at the expense of other countries which have their own problems.
Amit, what is your view on India? Do you think the recent price action in Indian equities is justified, or somewhere the fear is getting slightly overdone and India does not deserve to fall that much?
Well, India has been in an extended bear market, Nikunj, and that's what I've been arguing for the last couple of years. In fact, I would say that India has been in some sense a long extended bear market, and you have these small periods of euphoria. But if you are in an environment with high inflation, poor policies, then basically it's very difficult for markets to do well. I mean, one of the points which I have argued for a number of years is, external vulnerability of India remains quite high. One's dependent on monsoons, one's dependent on oil, one is dependent on foreign flows. So that's in some sense the intrinsic problem for the economy. It's not about fund flows or tapering to that extent.
I mean, the emerging markets have been hit hard because of the currency valuations as well as economic slowdown. Do you think price action in the markets is justified, or is it, or rather, the selling is now overdone?
I think it's very difficult to answer that, because again it depends upon policies. For example, if the government can engineer a soft landing, basically economic growth in some sense comes back, confidence revives in the Indian economy, then flows come back and it leads to a virtuous circle. But conversely, if you are in an environment where confidence doesn't come back, GDP growth comes down to 2.5% with high inflation, then again corporate earnings will get hit, banks will be in trouble, and the equity market will look expensive.
Right, Amit, fair point that currently the economic turf is bad, but the nature of financial markets is that they always tend to look forward, and before we will hit an economic bottom, prices would have appreciated well ahead of that.
No, I think India is still not out of the woods. In my opinion, one can very well see a 2.5% print on GDP with much higher inflation, and that's something I worry about. Granted, that would be in the bottom in some sense, but again, then the question will arise is what happens next year after elections, which is the government that is in power, what kind of fiscal policies they implement, and what is the effect on growth and inflation. So that will effectively determine our allocation to India. So again, there are a lot of moving parts. I cannot give one simple answer.
So Amit, what's your core strategy right now? What is it that you're buying or selling?
Well, we run a fairly diversified portfolio, and a big emphasis for us is always to be in economies that don't have macro imbalances. I mean, that's our first priority. And number two is, it's not about growth. What we are looking for are economies that are growing, but they are not taking undue risks to achieve that growth. So growth doesn't have to be high. It can be moderate, but it has to be achieved without taking undue risks. So that's some of the key variables what we look for economies, and we think there are a number of economies in emerging markets that are doing reasonably well within Southeast Asia, within Europe, that basically don't have such macro imbalances, and that's where we are investing.